Hey, homies, before I start the show, this is a breaking news addition to the podcast that you're about to hear. It was originally recorded on June 26th. This new data came from half a dozen sources that reported on Friday, July 3rd. So this is an update you can use with all the rest of the information. Freddie Mac reported that mortgage interest rates dropped to the biggest one-week drop we've seen since early March, down to 6.67, the fifth straight week of declines. But Lisa Sturdivant, who is the chief economist for Bright MLS, said that, quote, affordability is still a challenge, unquote, which means even with these rates dipping, we're not seeing the floodgates of buyers come out. Joel Kahn, the MBA deputy chief economist, it's Mortgage Brokers Association, he said, quote, uncertainty continues to hold home buyers out of the market, unquote. So if you're wondering why the market still feels like it's stuck in molasses, well, the jobs report also dropped, and we got that information just a few days ago. The Bureau of Labor Statistics dropped the June update with 147,000 jobs added, beating expectations by 37,000, and unemployment held at 4.1%. So what does that mean for mortgage rates? Well, there were a bunch of different articles that talked about it, but in, Federal Reserve speak and them cutting their rates, strong job numbers, that equals no immediate rate cuts. The CME FedWatch tool says there's now only a 5% chance that the Fed cuts the rates in their July 30th meeting. That's down from 24% odds just the day before. So it wasn't good to start with, and now it's really dropping. The odds in September for a cut happening then, that dropped from 94% down to 67% based on this information. So the Fed's on hold. And another reason for that is they're still spooked out by inflation with tariffs still on the table. One of the things they look at is the PCE index, and that's their favorite inflation tracker. It only came in at 2.3% in May, which is drifting further away from their 2% target. And the tariffs. Right now, the current tariff rate on imports is 15.8%, which is the highest since 1936. But if Trump's July 9th tariff cranks things up, like 50% on EU imports and 35% on Japanese goods, well then Pantheon Macroeconomics, they project that's going to push prices up another 0.5%, meaning those inflation headlines, well, they stick around, and that means the Fed has more reason to not cut rates and keep them higher. So the bottom line for this update, mortgage rates have fallen for the fifth straight week. Buyers aren't budging, though. They're still waiting. And most of them are waiting for those interest rates and watching the Fed rate cuts. But the labor market is too strong for the Fed to justify cutting rates just yet, especially when you mix in the inflation potential because of the uncertainty of the tariffs. Here's just two of the headlines I saw. Mortgage rates post biggest drop since March. And then the next one said, downward trend in mortgage rates, not enough to spur home buyers. So go ahead, listen to the rest of this episode. You're going to hear all the year-long data that we've got so far and how folks are predicting what's going to happen for the rest of the year. And their forecasts are only amplified by this most recent update on the Fed, the interest rates, and of course, buyer and seller behavior. So for you, this means most buyers are still frozen, hoping for the magic combination of lower interest rates and lower prices. And that means there's an opening, a window for you sitting in this freeze of 2025. All right, let's get to the show.
How to Buy a Home educates, protects, and connects first-time homebuyers to qualified vetted realtors in their area. Whether you're looking for DIY information or step-by-step guidance, How to Buy a Home is the #1 resource for first-time homebuyers.
Welcome to the 2025 mid-year forecast and prediction episode. Or should I call this the What the is Going On episode? Now, if you're trying to make sense of the conflicting housing headlines, you are absolutely not alone. I have never seen a more confusing time in real estate, so let's break this all down in detail. I have been neck deep in data from the top housing and economic experts, and I got to be real here, I have never seen this much contradiction in all the projections. Now, since 2019, a couple times a year, I lock myself in my research cave and I break down all of this data for you to help you make the smartest move possible. And despite all the trolls screaming at me in the comments, telling me I was just another shady realtor trying to pressure everyone renting into buying a home right now, the analysis and the predictions for the last 6 years, they've been pretty spot on. I want to get you your best path, whatever that is. That's my only goal. As much as I wish that I had amazing news about incredible deals coming soon, that's not what the data is showing. So if you're hoping this is the episode where someone finally says, hey, guess what, man? The market's about to crash and homes are going to be on clearance sale. Sorry, that's not this episode. I hope what you're looking for is an empathetic interpretation of what the hell is going on, and then potentially what could be coming, and then most importantly, to help you find a solution. If you're ready to stop renting, make a plan, and build wealth the real way with grit, strategy, and some truth bombs to guide you, let's do this. Usually on these forecast episodes, I gather my intelligence, my research from all the experts, and I kind of most of the time get a general consensus. But here in mid-2025, the data is much murkier than usual. It's like the multiverse of madness out there. I mean, depending on where you live, prices are up, prices are down, prices are sideways. Rates, sure, they've stopped the insane roller coaster, but they're still high. And the inventory, well, it's up a little bit right now, but nowhere near enough. So the forecast from the experts, they're more polarized than we've seen in ages. And nobody sees a home run opportunity in their predictions for the rest of the year. Not for the sellers or the buyers. And yet, opportunities are everywhere for renters to take advantage. Maybe not a home run, but you can hit a single. Maybe you might even have to bunt. Anything so you can get yourself on base and in a position to score. Oh my God, it is officially the dog days of summer. Football and basketball are done, so I am reduced to doing baseball analogies. This is what I'm going to cover today. Home sales. How many homes are exchanging hands? And then, of course, home prices. And then we're going to talk about mortgage rates. Unfortunately, how it doesn't look like they're going to drop and come to save you. So we're going to explore the other options. And then the inventory shortage that just won't quit. And finally, what it all means for first-time homebuyers. And most importantly, how you can make a move even in this market. Now, homies, I am not going to sugarcoat anything. Truly, that does nobody any good. I realize this is one of the most expensive and perplexing times in real estate. So you've got a lot to consider with your decision. And that is precisely why I'm just going to give it to you straight. Just the facts and how to prepare for what's happening right now and what potentially could be coming. Because now more than ever, you deserve compassion and support, not a Pollyanna, everything's going to be great, high-pressure sales pitch. I get it, gang. The struggle is real. So I'm going to get you all the actual data and help you find your own best solution, whatever that is. Let's get into it. Now, the confusion begins if you look at the headlines. Here's some Newsweek. Home prices expected to fall in 2025. The very next week, from the National Association of Realtors, home prices are going to keep growing. And then if you read Redfin, interest rates to stay elevated as Fed delays cuts. The very next day, Mortgage News Daily said mortgage rates lowest since April. Then Yahoo Finance said builders focus on affordability amid demand shift. But 2 weeks later, new home builder sentiment at third lowest rating since 2012 from the National Association of Home Builders. So those headlines are nuts. Which is it? Are we crashing? Are we booming? Is it buying time or waiting time? Here's what's real. This market right now, in the middle of 2025, this is a reset mode. After years of wild pandemic-era price spikes and 3% mortgage rates, 2023, 2024, and the first half of this year, 25, it's brought us back to a housing market that is trying to resemble a normal market. But that's not the picture that you're being told. And unfortunately, when you dig deeper, it doesn't become any clearer because everything contradicts itself. And anomalies, they're becoming commonplace. Let that one sink in. I recently saw someone say, boy, I miss precedented times. Yeah, that's how it goes for a lot, but that's definitely how it goes for housing in 2025. So as buyers, I understand you're confused and frustrated and wondering, okay, man, but just tell me, is now the time? Well, here's how it works. I've been telling people since I started the podcast that I think the best time to get into it is now because of the low inventory. Period. The end. Curtain. And my track record for 6 years of these forecast and prediction shows, it's been more than pretty good. And that's mostly because I don't have an agenda. I'm not trying to sell anything. I'm just trying to give the right information. And even in crappy and unpredictable times like this, the only thing that I rely on is the math. And yes, of course, the math was better back in 2021 and 2022. But even in 2025, the math, when you're doing a rent replacement strategy, still works to get into the market as a buyer. So my big prediction, most people will not get all the correct information, and the headlines they read are going to create fear and confusion, and it's going to keep most first-time home buyers on the sidelines. But the data and the math shows that there is just too little inventory still to meet the incredible huge pent-up demand. And even with a slight increase in inventory so far this summer, it's proving to keep prices still high and in most places still rising. And here's the stats behind that. Since we hit 8% in interest rates almost 2 years ago, back in October of 2023, we had a whole bunch of strange things go on, and nobody knew what was going to happen. So we had the uncertainty of an election coming up in 2024, and then we had a new administration, then we had tariffs, then we had the stock market roller coaster, and of course, that whole time we had inflation worries, and now we even have a war. Even with all that, the inventory stayed at historic lows, and the pent-up demand was still there. So even the most pessimistic experts looked back and realized, oh my gosh, prices have still been going up even through all of that for almost 2 years, which means the most negative Nelly predictions we have for the rest of this year are perhaps a 1% drop in home prices by the end of the year. So when you focus just on the data, so it's not a home run, but if you focus on the data, the best prediction is that anyone who takes advantage of getting their first home and getting out of renting in 2025, they're going to no doubt be in a better financial position than someone who waits till 26 or 27. Trust the math, trust the data, not the emotional roller coaster. Actually, that's been my approach for all 6 years of these episodes. And I say this humbly, but I haven't been wrong. Nobody's going to be more excited when I hear really smart people and I see data that concludes that we might be entering a softening of prices. I can't wait for that to happen. And I promise to let you know when I see it happening. Right now, I feel for you because this episode, it's going to reveal some facts and data that show that we're not going to have a big dip for the rest of the year, if not potential of prices going up. So what we're going to do is we're going to go through the data and then offer you some solutions. Now, with that said, even though the past few weeks I've grown a beard doing all of this research, I got deep, put my heart and soul into gathering all this information. I say this with love. You don't have to listen to the rest of this episode. You don't have to listen to all the data and the math. Truly, I mean that. I just gave you the summary right there. That was the TLDL, too long didn't listen. Yeah, that version. That's it. Everything you need to know. I mean, if you want to stick around, you can keep listening, but the predictions, it's not a unanimous consensus. So a satisfying, clear-cut answer, that ain't happening. Your best play is to ignore the data vomit that I'm about to spew onto all the listeners and just put on your blinders, ignore the noise, and work your last lease ever plan. Because as we hurtle into the second half of this year, the only thing that's certain is that the rent replacement strategy of home ownership is going to be your best hedge against inflation and economic turmoil, and mathematically is going to work out for you over the next few years. So feel free to shut this off. You can just go right back to the road trip episode 360 and get your list of educational topics. And then you can listen to all those, get more confidence in the process while you work on your own personal custom plan. I'm serious. My feelings won't be hurt. Feel free to shut this off right now. Hit it off. There you go. Okay, you're still here. You are a glutton for punishment. Here goes. Okay, let's start with the home sales. Now, the home sales data, which has nothing to do with home prices, keep that in mind. Home sales, that's just the tracking of the number of homes sold. So this is the 2025 sales data that has created immense bewilderment when buyers and sellers read the headlines. Rates are up, prices are up, Yet for 2 years straight, home sales haven't sunk. Then suddenly in May, we saw a 14% drop in the number of homes sold in that month, the biggest drop we've seen in 3 years. According to the National Association of Realtors, sales are still running at roughly only 75% of the pre-pandemic levels, despite robust job growth. And by the end of the year, no one really knows the prediction if we're going to stay at that 75% level or increase to the regular level of homes sold. And that's thanks to all those commonplace anomalies. Yes, a massive oxymoron. And the data behind that is this. The sellers have been waiting to sell. They've been locked in for almost 2 years when they didn't want to sell their home and lose their 3% mortgage rate to gain a new 7% rate on a more expensive home. But what we're starting to hear is that 2 years is a long time and life happens. Whether they're adding kids or needing a new school district or more space or job relocation or any number of things that mean, you know what, maybe the 7% is not too bad anymore. And remember, that's pretty normal when you dive deep into the interest rates. And so they decide to just can't wait any longer and they're going to buy a new home despite the difference in their rate. So that's what's going on with the sellers. What about the buyers? Well, the buyers who spent the end of 2023 when rates hit 8% pulling back and then all of 2024 doing nothing, waiting for something to happen. And the first half of 2025, they're out there waiting for interest rates, been sitting, and maybe coming to terms with the math. Who knows? Maybe they listen to this podcast. But I can report that I've seen the numbers. And right now, there is indeed a huge pent-up demand. There are plenty of surveys supporting the fact that more people are waiting, like 70 to 80%. And many experts expect that some of these buyers, they're going to stop holding out for lower rates and re-enter the market in the second half of 2025 out of necessity. Once they just figure out, you know what, this is the new normal for financing. The next piece of the puzzle, home prices. Now, I hope you like illogical and baffling. Here's an example of what I mean. There was a June 24th article in a real estate publication called Riz Media. The headline said, home price growth slows to slowest pace since 2023. It cited the statistic that year-over-year growth usually hovers around 3%. But in April, there was a decline, but it was only to 2.7%. And that number was attributed to the fact that during the months of February, March, and April, the housing market was affected by consumer sentiment and elevated mortgage rates. But looking ahead, the rest of the article said the inventory will continue to support high prices as future supply may be constrained. And then looking at more data, Redfin reported, quote, more homes for sale combined with fewer people interested in buying them is expected to push sales prices down, unquote. Now compare that with Lawrence Yun, the chief economist at the National Association of Realtors. And I know he works for the National Association of Realtors, but he's a straight shooter and he's pretty right on all the time. He's predicting a 3% increase by the end of the year, meaning that the end of the year, home prices are going to raise 6%, and he thinks new home sales are going to be up 10% from last year. What he said was, quote, home prices are not on the verge of a nuclear crash. There's too much equity and too little distressed selling for that to happen, unquote. So which of them is right? Oh, you got me. So let's look at more stats to figure it out. Right now, the current median U.S. existing home price is $419,000. with 23 consecutive months of year-over-year price gains. So is it going to continue? The predictions are mixed, but nobody sees a crash. The S&P Case-Shiller Index, a big data source that we use to find all our stuff in real estate, they showed national home prices are still creeping up 3.4% annually, but slowing each month. And Daniel Hale from Realtor.com and Greg McBride from Bankrate, they note that markets with more new supply, they could see flat or even slightly lowering prices. Whereas undersupplied areas, especially in the parts of the Northeast and the West, they will likely still post modest price increases. So in short, the price growth overall could be tepid nationally, with little or no change in many markets. So that's what some of the people are saying, but the headlines that are getting the most play adding to all the misinformation and confusing probably whatever you're trying to figure out if you're moving forward, they're the ones that come from the big names that you know about, and their updated forecasts that actually changed their forecast from the beginning of the year to the middle of the year. Redfin's economic team expects that the national median sales price will decline about 1% by the end of 2025. And Zillow, their latest model in April, projected the same 1% drop, but over the next 12 months. Now, they back them up and say that these more pessimistic outlooks stem from the data showing that more sellers are listing homes while the buyer demand seems to have cooled this summer, which is slightly tilting the market balance. You see, by this spring, the total inventory was up 16 to 17% nationwide. And as home sales slow down from the frenetic flying off the shelf immediately pace that we've seen, some experts expect prices to flatten out completely or dip in the next coming months. But from the pessimistic to the optimistic, there's one prediction that everyone agrees on. There is no 2008-style crash on the horizon. This is a market correction after a decade of relentless growth. So yes, despite high costs, high rates, softer sales, the analysts don't foresee a market crash. And a lot of them actually said they didn't even see a major recession in 2025. Now, frankly, between me and you, are you kidding me? How can anybody know? It's a crazy time out there. That might happen. But regardless, the thing that they're saying why we're not going to see a housing crash is because things are different now than they were in 2008. There are much tighter lending standards, and they're calculating the fact that even if we do have this rising inventory continue, the supply is still extremely starting at an already historically low point. One respected consultant noted that, you know what? If a mild recession hits, we'd likely only see a single-digit percentage dip in home sales because of that low inventory. And they said, and little, if any, price declines. So they're thinking if a recession happens, that not only is it not going to be a collapse, but they say, you know what? It might not even be a drop in prices, which if you go back and look at the history and listen to my other podcasts, there's economic data to support that. Every crash, it's like 7 out of 9 of the last crashes have all actually seen home prices go up during a recession. So where we're sitting right now is this weird attempted normalization of a market, and it's getting some strange results. And a lot of the reason for that is because the data that's coming in is so mixed because real estate is local. Buffalo, New York is not the same as Phoenix, Arizona. I mean, you might see a 4% drop in one place and a 6% raise in the other place. Newsweek noted that the national numbers might be softening, but they did see those pockets of resiliency, especially in the Midwest, the Northeast, markets like Cleveland, Detroit, Buffalo, told you, and St. Louis, where the median home prices remain under $300,000. And for Florida, gang, if you're in Florida right now, make sure you have an awesome team that works with you. We are seeing record declines in condos and townhomes thanks to natural disasters and home insurance issues that are creating havoc with the HOAs. So be careful if you're in Florida. Now, other parts of the country, Housing Wire reports that Washington, D.C. is only in the beginning of the Doge fallout. See, there were a lot of things that were handed out originally and then didn't go through. And now there's a lot of people kind of sitting on hold. They're saying that sales are down 6.5% compared to a year ago, but there are several buyouts that might create a whole glutton of listings as we get to the end of the school year. Some of the people are holding out, waiting for their kids to finish school. And then there's, how about a nice place in the Midwest like Wisconsin? Let's see if these numbers make sense. Spoiler alert, they don't. In May 2025, home sales are down 2.1%, and the listings are up 8.5%. But the median price of the homes, that's up 4.3%, from $316,000 last year to $330,000 today. Did you hear that? Sales are down, listings are up, but prices are still up at 4.3%. What the heck is going on? And New York State, just as confusing. They're reporting sales down 10.9% despite a 3% increase in listings. But at the same time, the median price of $436,000 is up 3.8% from last year. Hello, 2025. So the translation, the results, they're going to vary pretty darn significantly from region to region of the country. And much of the data is contradictory, illogical at best. So unless you're one of the informed individuals that is aware of the pent-up demand and the historically low inventory, you probably would get pretty scared off, even when you see, hey, inventory's rising. But yeah, remember, it's rising from way, way too low to just way too low, which is still way too low. So what should buyers take away from this price data? Well, if you're in a high-growth metro area, expect some corrections, but not a crash. If you're in an affordable market, expect that there's probably going to be more competition because people will get sick of waiting, which means steady, if not rising prices. And if you're waiting for a huge price drop, you'll probably be waiting till the end of the 28, 29. I have no idea. If you're predicting more than 2 or 3 years out, you're a moron. So probably not in 2025 for sure. I wish that wasn't the case for you guys. And I promise I'm going to let you know when the data reveals that a drop is coming. What I do is just give you all the data right now, and I give the best predictions based on what's in front of us. Truth bombs and solutions, not fear and wishful thinking. Speaking of wishful thinking, segue into mortgage rates. The number one obsession with first-time homebuyers, and why not? You guys know I love math. So let's talk rates, because this is where everybody gets stuck. Rates peaked at 8% in October 2023. And today, the middle of 2025, they're hanging around 6.7 to 7%. They're not climbing and they're not dropping off a cliff. They're just kind of stuck. So basically, the biggest prediction is probably not to expect a miracle. In the past 2 months, yes, we've seen a drop, but that drop was from 7% to 6.8%. In the last week of June, rates hit their lowest point since April. That had a national average that actually dropped to 6.79%. And I was talking to Kelly, our unicorn lender from episode 339 and 340, who gives great advice on how to get your mortgage. She said that she was quoting rates as low as 6.3. Yeah, the national average was 6.79, but depending on the type of buyer, and most importantly, the type of lender you got who can find the right program for you, she was seeing 6.3 with no points paid, no extra money, no buy downs. And that was at that lowest point there in June. So yeah, rates are going down, but the experts, they're saying this is not the beginning of a big slide. No one's seeing rates plummeting down to the 5% range. According to Fannie Mae, by the end of the year, we might see rates go to 6.4%. And then Redfin's economist Chen Zhao said, quote, "There's no sign that rates will fall sharply, and buyers waiting for 5% interest rates are likely to be disappointed," unquote. Some of the reasons why the economists cite continued economic growth, but combined with inflation fears and the government debt as factors keeping interest rates high. They definitely do not see a return to those artificially created lows of 3 and 4% that we had post-pandemic. That ship has sailed and probably hit an iceberg. And so if you're sitting around waiting for that rate, it actually has another mathematical downfall. Because if the rates do get into the 5% range, guess what happens? Yeah, all those pent-up buyers flood back in. The ginormous pent-up demand makes a huge run on that low inventory, which means bidding wars ensue, worse than we have right now. The prices get elevated, and any savings that you would have had in a lower payment because of the lower interest rate get wiped out by the new math of a higher home price. And like I said before, this isn't just theory. Surveys have 70 to 80% of buyers still on hold, waiting for rates to drop. The builders, they actually tested this. They, when rates hit 8%, were freaking out and tried to figure out, what am I going to do to sell? Okay, you know what we're going to do? We're going to offer a deal. So they were like, rates are at 8. Let's offer them at 6.8. See what happens. The response? Nothing. And they offered them down to 6.5, and rates were like at 7.98%. 6.5 was a huge deal. The response? Meh. So they said, all right, we got to get things moving. Let's put it in the 5s. And they put the interest rate at 5.99% as an incentive. Boom. Homes flew off the shelves. So if you're one of those people sitting around waiting for rates to get below 6%, it means you're going to be entering an extremely competitive buyer's market. So the advice, don't wait for the fool's gold rush, beat the crowds. So when it comes to rates, that's what the experts think. No big drops, no magic fix. And again, I wish I had different news for you, but the data's telling me a different story. I'm on your side, and I'm going to continue to get you the math to help you win now instead of playing the interest rate waiting game, hoping for a miracle. And I understand it's not pretty, but the best way to interpret all this weird 2025 status quo data, this flatline mortgages, it's to acknowledge that. And then to work a proactive plan for you instead of reactively waiting for the market to do something and then try to react to that. Basically, no one's seeing any major changes. And I know that's not attention-grabbing news. It's not sexy. It's not enough to get trepidatious buyers into the market. So go ahead, use that to your advantage. The math is still the same now, with anticipated minor home price increases or decreases combined with the flatline mortgage interest rate, as it will be if rates drop and the flood of buyers push the prices up. I mean, you're going to be playing gladiator games at open houses. So yeah, interest rates always matter, but sitting around waiting for them in 2025, unfortunately, there's going to be a big rush. And that's because of the pent-up demand combined with, well, our next topic of conversation, the huge historic low inventory. Yeah, see? I say it so much that we got a fun sound effect for it. Yeah, you see that? I say it so much on the show for the last 6 years. We've got a fun sound effect. So we're going to talk about the real Captain Chaos in this story. Inventory, specifically low inventory. Don't play it, JT. I'm going to keep going. Inventory, while everyone else is so focused on crunching the numbers on the prices and the interest rates, inventory is the one piece of data that controls it all. And if you don't believe me, go back and check the tapes. I've been reporting on this since the very beginning of the podcast in 2019. Here's what happened. During the crash in 2008, everything changed. And although we have recovered from that 2008 crash in almost every other economic factor, housing inventory, it hasn't recovered. It's still way below what we need. Different reports out there, most of what I've seen, we're 4 to 6 million homes short of what we need for a normal buying market. During the Great Recession from 2008 to 2012, new home construction halted by the millions. And since then, we haven't come close to catching up. And you know what? Since 2012, population increases because we're still making people. Now, I was assisting first-time homebuyers in bidding wars from 2013 to 2020, and everyone was like, because the crash just happened, oh, you're not going to keep going. They said that to me in 2014, 2015, and it just kept going up because of the low inventory. And that happened all the way up to the pandemic. The shortage was so bad from 2013 to 2020 that on starter homes, it was not unusual to get 20 offers, 40, 50 offers, even 100 offers on a home in the first weekend. And then as we hit 2020, pre-pandemic, it was still going. I had a really nice starter home get 6 offers on the weekend of March 14th and 15th. Well, you know what happened. Beware the Ides of March. Boom! Lockdown. And we lost all those buyers by Tuesday. But you know what? In just weeks, we had multiple offers again. Now you're thinking, wait a minute, how can that be? At the very beginning of the lockdown, all the pandemic, the fear, the uncertainty, 2 words for you. Low inventory. Yes, thank you for the sound effect, JT. When it comes to the economics of housing, it's simple supply and demand. And that's why I've been reporting the data on the low inventory here on this podcast since I started 6 years ago. It is the only determining factor that is creating, well, this illogical chaos that we have right now. It's not rates, not prices, not inflation. The usual response to the upticks in what we've had in rates and prices and inflation. It should be a downturn in home prices, but it hasn't happened. Why? One answer. Play it, JT. Low inventory. I didn't even say it that time. The low inventory has created contradictory and irrational moves in the housing market. But if you're listening, back in 2022, when the rates were in the 3%, then they rose to 4%, and the prices were skyrocketing at the same time, a lot of people said that if we hit 5%, no one's going to buy with the new high prices, plus that new high interest rate at 5%. Now, I'm not going to get into the whole industry argument, but I did know where the inventory was. So back then in 2022, I disagreed. And I said so here on the podcast. And soon enough, thanks to the low inventory at 5%, we were still seeing 20 offers on every home. So then, of course, the people said, well, that's now, but there's no way that's going to happen when we get to 6%. Well, except those of us who were helping first-time home buyers, and I was talking to my buyers and buyers all over the country, and I found out there were not enough homes to go around. For every 20 offers on the home, 19 people didn't get it, and they were still on the hunt. So it continued. Low inventory. Prices went up as rates went up to 6% and 7%. And check the data on the home prices from 22 and 2023. Because of the low inventory, they kept going up all the way till rates got to 8% in October of 2023. And that's when it happened. Oh, all those people who were saying high rates are going to stop everything, they were right. They were right from Halloween to New Year's Eve, and then to everyone's surprise, except me, the homies, and the unicorns, as the rates settled into 7% in 2024, the demand still outweighed the supply, and the prices still went up in 24. So as the leading first-time homebuyer advocate and educator, it sucks that I have to keep reporting that you're on the short end of the supply and demand stick. But gang, that's what's happening. And the data isn't changing anytime soon because building new homes takes a lot of time. And the builders, don't be fooled. They like scarcity. You know why? It raises prices. If they flooded the market with all the homes we need, prices would drop and their profits would go down. And the builders aren't just greedy right now, they're also hamstrung. According to a report from Forbes, material costs, tariffs, and labor shortages, they're holding back the supply of new homes. So I'm not going to sugarcoat this. If you see headlines like this, housing inventory finally rising. Well, after years of tight supply, active listings hit 1.03 million homes for sale in May 2025, up 31% year over year and the highest inventory level since 2019. This marks the 19th straight month of inventory growth, giving buyers a little more choice. That article, it is reporting correct news. And the numbers sound good to you, but let's keep in mind two things. Number one, the reported numbers are on the average of all homes. The inventory is not increasing that much for starter homes. There is a lot of new inventory that's coming in the luxury market and the second tier market. And as for the growth, yes, we are seeing growth in inventory, but it's growing from the absolute very, very bottom. There's nowhere to go but up. If inventory was a water glass and it was only 1/8 full, and you added another 31% of that 1/8 to the glass, that is still a very empty glass and a giant number of thirsty buyers. So let me also drop some population data in the mix. One report noted the demographic trend supporting long-term housing demand. They said the underlying demand for housing, it remains robust, and it's driven by the largest generations coming into the home buying age. Millennials, mostly in their 20s and their 40s, they're ready to get in home ownership, especially as they form families. And right behind them is Gen Z, who just moved out of the house and went, whoa, hey, mom, dad, rent prices suck. And so many of them are looking at home ownership as an option instead. So on top of everything else, we have a demographic wave that means millions of new people trying to buy homes and form households, creating a fundamental floor under the housing. Even if 2025 is a challenging year with high rates and high prices, the sheer number of buyers aging into the market, the economists say that suggests that housing demand is going to persist, and any price corrections are likely to be gradual rather than a free fall. Realtor.com headline, Housing Supply Gap reports say we are still short 3.9 million homes, saying that with that 31% jump, we're still below pre-2019 inventory levels. And Forbes reported that 73% of people who have a mortgage right now, they have interest rates below 5%, and they're sticking pat. Yahoo reported that home sales are up 10.9% year over year as of April, and 1.1 million new homes, they are expected this year. But here's the thing. They're reporting 1.1 million new homes. Like, that's a big deal. That's the norm. And the only reason we're up 10.9% from last year is because last year we were way short of what we needed. All we're doing is we're getting back to the average, which means we're not making a dent in the deficit of homes that we need based on the population, and not to mention the population coming into it and the standard data that we've had for decades on how many homes need to be built per capita per the number of people. There's a lot more quotes in here, but I'm just going to keep going right to the data. The bottom line, when you hear about improving inventory, you have to bear in mind all the data. Supply and demand is a base cause in pricing on anything that is bought or sold. So this is going to continue to affect home prices, the low inventory, the low supply. And that's just going to mystify rational people who can't see the logic in the rising prices as the interest rates stick at 7%. But what's happening is more people are finding a solution to become a homeowner in this unique time in our history, while the others are waiting for a miracle to save them. So you're best placed to work a plan with your options, which might surprise you. And who knows, maybe you'll end up being like the other homies who heard my reporting on low inventory, and they've ridden the wave of that illogical equity gain over the last few years, which, by the way, it only seems illogical if you're not dialed in on the inventory data. Woo! Homies, that was a lot of data and statistics, so time for some analysis, motivation, and finally, the action steps. So, is it a buyer's market? Or is it going to be a buyer's market later on in 2025? Although the data says that we're currently in more of a buyer's market than we have been in a while, the question is it really a big buyer's market, and will it continue to shift into a bigger one? Some say that we're seeing signs of a declining market, but the fact remains, due to pent-up demand and low inventory, Jesus, I'm going to get that tattooed on my leg. Pent-up demand and low inventory. Your best window of opportunity is looking like right now. The competition is waiting in the wings. And should there be any glimmer of hope that makes affordability sound more attractive, the race will be on, the competition will ensue, and the bidding wars will get ugly. I know, it's not what you want to hear. Sometimes I come to dread these forecast and prediction episodes. I really just want to be able to give you guys this incredible news, but instead I give you boring, but long run going to be good for you news. I'm not going to be deterred on bringing you accurate data, so you know it's full transparency here. And it's truly up to you. But when you get the true accurate data, then I can feel comfortable letting you decide on how to get out of the rent rut and stabilize your financial future. And yeah, the data today doesn't show that giant discount opportunity right now, and it really doesn't show one coming. So the best thing I can offer is a pathway. Show you how to create your rent replacement strategy and build wealth with simple, stable growth, using your money for you, that biggest monthly payment. And the market's going to chug along with not enough homes to supply to meet the demand. I know that is not as exciting as some super insane deal, but the alternative could be worse. Maybe there's one of my listeners out there who's been listening for 2, 3, or 4 years. Oh my God, are you out there? Someone from 2021 still listening? and you know what? Maybe that person, who knows? There probably could have been a lot more ready than they thought back in 21, but they didn't check with the professional. And now they've seen interest rates double, and the $500,000 home they were looking at, but they didn't think they could afford in 2024, now it's $575,000 or $600,000, and the interest rate is double. But I told them back then the inventory was going to keep things going, even though it didn't make sense. Let's look at the opportunities happening now, and perhaps for the rest of the year, things that you can take advantage of before the floodgates open. Yahoo reported homes are sitting longer. This is happening. I've been hearing this from my unicorns everywhere. It's something we call days on market. That's how long a home is listed before it goes under contract. The average days on market, it's 51 days. That's up 6 days from last year at this time. And then 19% of all the listings in May had price cuts. And I've actually heard it way more than that. I don't know if that statistic got bigger in June, but they don't have the June data yet the day I record this. But 19% price cuts. That's actually the most since 2016. And nearly half, this stat I've heard multiple times, almost 50%, it's like 49-something%. The sellers, they're offering concessions to the buyers. from repair credits to mortgage rate buydowns. Now, all those stats sound awesome, but here's one little caveat. Take those all with a grain of salt, because those are calculated from all the homes for sale. And much of that price cuts and long days on market and concessions, a lot of that comes from second tier and luxury market, not the starter home market. Because a lot of those guys, they overprice their homes right from the beginning. But the good news is that for some first-time home buyers, we're seeing it. A lot of sellers are actually, well, they're starting to get greedy too. Yeah, they're listing their homes too high. It's not as much as the luxury in the second tier, but we are seeing it happening. And here's what happens. There's a homeowner with a starter home, and they're watching what's going on in their neighborhood. Homeowners are always watching what's going on in their neighborhood. So let's say Sally down the street sells their home for $425,000 in March, the highest sale on the track for a long time. Well, they think Sally's home's a dump. I figure I can get $475,000 for my place. So middle of March, they meet with the realtor, spend a couple months getting it ready, and then they list the home a few months later in June at $475,000 because Sally's dump sold for $425,000. But the one thing they failed to notice in April and May is that home price increases have slowed a lot or even flattened out. And when they list at $475,000, they're overpriced. And I'm telling you that story because we have several stories of homies that have made offers on homes like this. And they either got a lower price or they got seller credits back to them, which a lot of them have used to pay for a mortgage interest rate buy down. So the purchase becomes more affordable for them. Where else can you take action? Where else can you take advantage? How about new construction? What's happening with new homes right now? The builder vibes? Not great. Their confidence took a hit big time. The National Association of Home Builders, along with Wells Fargo, they have an index. What they do is they spit out a number, and it's a rating that they monitor all the time on the confidence of the home builders. In May of 25, it dropped to 34. And what does that mean to you, me and you? Nothing. Except I'll tell you that it was down from 40 in April, and that 34 rating, that's the lowest since October 2023. And by now, y'all know what happened back then. Mortgage rates went to 8%. Yeah, things are getting so ugly. In May, new construction and permit requests sank to 5-year lows. So why? Why are the new builders not building when we need all this inventory? That's an ugly story. First of all, they're not doing it because mortgage rates haven't reduced as much as they hoped. Climbing construction costs are happening and the tariff uncertainty. So the builders are pulling back. They're doing that to be greedy. But here's where you take advantage of that. To keep the sales moving, in some places in the country, we're seeing new home builders slash prices and throwing in sweetener deals. In May, 34% of builders cut their list prices by an average of 5%, and a whopping 61% offered incentives. Think about better upgrades in the home, or credit for closing costs, or mortgage rate buydowns. And it's working because the new home prices are sliding. In April 2025, the median price for a new single-family home was $407,200, down 2% from last year. Translation, builders are giving up some profit to keep their volume up. So builders are playing the waiting game right now. They're not bailing out on the industry. Things aren't going to drop off a cliff. They're fighting with incentives and not altogether halting their construction. But you know what? You need to be careful when you're going out to buy a new home. In fact, I'm going to have JT look it up for me right now and put it in the show notes. Find the last time that I redid buying a new home versus a resale home. Stick that in the show notes for everyone. I'm sorry I don't have the number off the top of my head. Y'all, this is like 361. I can't remember everything. But make sure that in 2025, you are working with a realtor. Because if you go in and use the builder's realtor and they want to push you into the builder's lender, sometimes that's good for your incentives. But if you go in there and you sign anything, I mean anything, you are locked into using them. And guess whose best interest they have? Yeah, their profits, their spreadsheet, not you. And finally, if you really want to know where the builders are, this is from one of their reports. Long-term housing, they still see it as strong. And if rates drop in 2025, then the builder confidence and their construction, it's going to rebound fast. So 2025 is your year to take advantage. And then let me give you this one little note before I get into some other things that you guys can do, action steps moving forward. Some of you could be reading right now about rent reductions. I'm having people reach out to me about this, and I understand that. Those headlines, consider that they're spewing the same kind of data like the increase in inventory reporting. It sounds great, but reduced from where? How high? The rent decreases. Now, that glass of water, it was already overflowing, filled to the very, very top. And they are seriously just using an eyedropper to pull out a few drops. There was a report that said that the median asking price in rent is down. The dollar amount was only $29. I am hearing different things from different people all over the country, but I'm not hearing about massive reductions. The cool down right now, what's happening in rental markets is there was a surge of new apartment construction. However, the experts, they don't see this trend lasting forever because right now, new construction on apartments and rental living, it's slowing down dramatically. So now you got everything you need to know, all the data in the world. Let's talk about you. If you're a first-time home buyer in 2025, you got a lot of noise coming at you. But now that you have the real data behind the noise, here's your action steps. First one's pretty easy. Ignore the noise. Focus on you and your numbers, and then make a plan and take small steps. One of the biggest action steps you can do is to know the data or know the data. I don't care which way you say it, just know it. But here's the catch. Don't just know all the housing and mortgage data. Know your data. Where are you today? Do you know, with a professional verifying everything, all of the options that you could have even right now to buy a home? If you don't, and you're just relying on Google, well, then it's the perfect time to get a unicorn realtor and a lender to find out. And I'm done talking about get them to find out if you can go out and buy a home next weekend. This is not to get a home. It's just to get a plan to buy a home whenever that's right for you. Because, yeah, this market rewards readiness, not waiting. And in fact, you can apply that to all markets, that it rewards readiness, not waiting. All the markets, no matter what's happening, when you are in a ready position, that's better for you. So how do you get ready? Well, that's get those action steps. Your last lease ever. Simple things you could focus on: your credit score, your debt, and your savings. And you know what? Even if you never want to buy a home, you find out as you're doing it, yeah, you know what? This isn't going to work. What's the worst that can happen? You get your finances in your control, so you can make decisions when you want, not when you have to. Now, here's the truth bomb that no one tells you when they say things like, now is the best opportunity for you to buy a home. Great. The truth bomb? You are never going to be more house poor, struggle making your monthly payment more than your first 3 to 5 years that you are a homeowner. Yeah, you don't hear that one very much. And that only sounds like I'm being negative about home ownership. If you haven't listened to episode 355, where I broke the numbers down in exhausting detail. And as the dude on the mic, trying to get all first-time homebuyers a fair shake in, unfortunately, what is a corrupt real estate system, I know the actual data isn't a home run of excitement. It's boring, but it's factual. And it starts a little tough, but in the long run, it's so beneficial and it's right to get into it. Even if you buy today's high prices with the high interest rates, your new monthly payment as a homeowner for the first 3 to 5 years, it's going to be hard at first, but then it gets easier. And then you will be in the game sooner with more equity built, since the analysts see that this 7% interest rate is probably the highest it's going to go for a long time. And who knows, maybe you'll have a chance to refi in the future. And as I've said for years, your payment on day one will likely be the highest, and it will get much easier as your income grows, but your mortgage doesn't. So when you're trying to figure out when to go, forget listening to all my predictions. It's not about timing the market. It's about time in the market. And I know it seems like trying to wait it out with all this craziness might be the right play, but Go back and ask that listener from 2021 or 2022 who, has heard like 5 of these podcast prediction podcasts. And if they're still here listening to me on their drive home from work, I guarantee you they are cussing me out right now in their car. Dude, don't blame me. I told you. Say it with me now. Low inventory. So do yourself a favor. Don't try to time the market. Time your life. If you want to own a home, own the plan first. 2025 is a transition year. And this is your moment to plan, to act, to stop waiting for things to be perfect. Make your move, get your finances right, build your team, know your numbers. The real numbers with a professional and creative team evaluating it and revealing all your options, even if that means that for the rest of 2025, you're building a plan, trying to buy maybe in 26 and maybe even bleeding into 27. Now, here's one final stat that I found in my research. The saddest part about this statistic is that I saw it in a publication just for realtors. It was encouraging new agents to get on their game and to figure out how to write better offers. Because according to the report in Inman, the real estate publication, 10% of agents now control 42.6% of all the homes listed for sale, meaning that the savvy, experienced agents are the ones looking at almost half of the offers. So what they were trying to say is like, hey, agents, you got to get better. Okay, I'm going to turn that around and say it for you. Hey, homies, if you're going to be writing offers for the top 10% of the agents who now control 42.6% of all the listings, your offer better be dope, which means your advocate better be experienced and awesome. That should be another great motivation for you to team up with the Unicorn Support Squad. If you want one, go to howtobuyahome.com, ask me, or figure it out on your own and make sure they're a unicorn. I hope you've all enjoyed this. And by God, if you're still here, you are serious about this. So, last piece of advice, no matter what the headlines say, you can do this.
Looking for more DIY education or your own personal step-by-step guidance through the home buying journey? Since 2019, How to Buy a Home has been the #1 resource for first-time home buyers. So visit howtobuyahome.com to get started.